Ladies and gentlemen, I welcome you all to the H1FY25 post-earnings conference call of Spectrum Talent Management Limited. Today on the call from the management team, we have with us Mr. Vidur Gupta, Managing Director, and Mr. Siddharth Agarwal, Whole-Time Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the quarter, the growth plans and visions for the coming year, post which we will open the floor for Q&A. Over to the management team.
Thank you, Vinay, for opening this. Thank you, everyone, for joining in the investor post-earnings conference call for H1 2025. I've come to the key facts. We are at the moment managing 33,461 workforce. This is as on 30th of September, out of which 13,623 were apprentices. Our core team has grown to 500 plus. Vendor network has also expanded. To give you a few key milestones at a company level, we added 6,428 headcount in H125, wherein H224 showed a promising contribution of 15.81%, adding 3,707. So the overall addition has been much higher. Revenue at a company level, H1 to H1 grew by 25%. Manpower and recruitment services grew by 18.7%. We increased the headcount from 18,264 in H1 of 23 to 33,461, which is in 2 years about an 83% growth. The key sectors that were driving the growth were IT, ITES, pharma, manufacturing, and retail. We also have a few very important updates where we are rebranding our IT staffing business into Speraspect. This is a brand that we have created, which will take care of not just IT staffing, but look at projects in the longer run. The apprenticeship training vertical added trainee headcount by 5,307, wherein H2 FY24 we added 1,051. We also started another new vertical called Retaspect, which is the retail vertical. We are already very well established as a player in staffing for the retail industry. This is taking it one step forward where we offer related services to retail companies. These related services I will be covering in the coming slides. Snapshot is 532 crores of top line. We added 99 new logos. The market is opening up. Overall revenue, H1 to H1 grew by 25%. EBITDA from an H1 to H1 grew by 10%. Overall headcount growth is 42.7%. Trainee headcount growth again is by about 22%, H1 to H1. Now I'll let Siddharth take over for the financials.
Good afternoon, everyone. I'll quickly run you through the financials for the organization for the first half. So, in the first half of the year, our total revenue stood at 522 crores, vis-a-vis 423 crores in the previous half year, which was around 23 or 23.5% increase half year on half year. On the EBITDA front, the EBITDA increased by 5% to a 5.37 crores, up from a 5.14 crores in the previous half year. The PBT also increased by around 18%, up from a 3.56 crores to a 4.2 odd crores in this particular financial half year. And profit after tax stood at 4.32 crores versus 3.75 crores in the previous half year. On the consolidated financials, the revenue grew around a 23 odd percent to a 531 crores, up from a 431 crores. The EBITDA increased by a 5.5%, up from a 5.41 crores to a 5.71 crores. and the PBT increased by around 17 odd percent to 4.54 crores, up from 3.86 crores in the previous half year. The profit after tax stood at 4.66 crores, up from 4.04 crores in the previous half year of the uh, of 24. Uh, on the standalone segment, the manpower businesses grew by around 19 odd percent. We did 329 crores of revenue as compared to 276 crores. The electronic goods did 192 crores in the current half year, as compared to 144 crores in the previous half year. So the total income, total revenue was 521 crores as compared to 421 crores in the previous half year. The EBITDA I've already spoken about. The EBITDA totaling on the manpower side was 4.56 crores, and on the electronic goods was 80 lakhs, uh, which totals to around 5.37 crores, which in comparison to the last half year was 5.12 crores. On the consolidated front again, the revenue on the manpower supply side was 338 crores as compared to 285 crores in the previous half year. The exports is the same. So the total revenue was 530 crores as compared to 430 crores in the previous half, which is around 23 odd percent increase, half year on half year basis. The EBITDA stood at 5.71 as compared to 5.41 crores, which is a 5.6% increase half year on half year.
Thank you, Clark. I would also like to mention, so H2 numbers comparatively, we've dropped in terms of exports of electronics goods because H1 for electronics goods is usually way slower, which is where you will see the gap that is coming. It's primarily owing to that. However, on the HR services, manpower supply and recruitment services, we've grown by 6% from H2 FY24 to H1 FY25. This is just a brief about how our internal headcount and external headcount has grown. In terms of productivity, we have increased. We have continuously been focusing on improving productivity per resource. So our core employees managing the staffing piece have gone to 95, and they were managing 33,461. So productivity is up to about 350 resources per internal person. Now, way forward. First, I would want to talk about Retaspect as a vertical. So this is an integrated HR solutions brand. We have had Mr. Naman Nangia join us in July 2024. He's got a lot of experience in marketing, sales, and go-to-market strategies, and he's the one who's heading this service line. We are offering productivity management solutions by to drive store success by improving sales, customer satisfaction, and operational efficiencies. Uh, we are putting in a lot of technology into place, which will assist us in an integrated application for the staff that we are deploying, and ultimately aiding the customer in a better visibility on their own sales and what the competition is doing. We've also added learning and development, which has online training and offline training for continuous skill enhancement and improvement for the retail staff. And we are getting into trade marketing solutions where uh, we are these are on ground services from in-shop branding to data-driven insights. Next is Peraspect. This is basically the repositioning of the IT staffing business. We feel that it needs to be represented in a different manner, and the staff that we get on board on our payrolls from the technology sphere needs to be managed in a different way as well. Hence the rebranding and the changed approach. Also, we feel that there are places where we can take up projects, not just staffing, and we feel that that can leverage our bottom line. That's the reason for this rebrand. Uh, we are actively now pursuing mergers and acquisitions. So not mergers, actually only acquisitions. We are looking for companies in specialized staffing, in IT staffing, in HR tech, in BPO, in the US staffing. So these are fields that we are focusing on, and we plan to do at least three acquisitions over the next 12 months, so that this can all augment into a much larger setup and an integrated offering. We've had one new addition to the team that I missed mentioning in the last conference call, which is Mr. Piyush Sapru. He's joined us as the Vice President of Business Development. He's got over 22 years of experience. He was with this industry as head of sales in a competitor. Now we'll open the floor for questions.
Sure. Uh, all those who wish to ask a question may please raise hand. In case you're unable to ask a question or raise hand, you can just drop a message on chat and we'll invite you to ask the question. Anybody who wishes to ask a question, please raise hand. We'll take the first question from Kishore. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. I would like to ask you about Retaspec. Can you explain a bit about Retaspec and the need for doing this branding? And follow-up will be, is there a plan to demerge or divest these businesses separately?
So we are already providing a lot of talent to retail companies in a shop and shop format where these people are spread out all over the country. Now, there are some basic challenges that a lot of retail companies face. One is understanding how their product is positioned.
Okay.
Second, training the staff. Their reach in a lot of places is limited because they only have some staff and no senior people around. Market intelligence, where they want to map what a competitor is selling. At the same time, when it comes to store audits, so in the application that we are working on, this application uh, helps them identify where their product is positioned. So, and considering the fact that we have so much manpower deployed all over the country, we will be able to utilize them on a gig basis, where on their weekends we are able to utilize them, or on their off days we can help them audit. In our own app, these guys, our staff can record the kind of sales the competition is making. This will help our clients take a much more informed decision about what products or what packaging to be pushing towards those particular stores according to region, because every region has a different way it functions. Every region has a different price point that things are selling at. So all of these offerings combined needed to be positioned and packaged in a different manner. Now, we are an HR services company. Until the time we don't come up with a clear brand which represents what we want to add value with for the customer, it wouldn't have made sense. Along with this, we've also added training. There is a gap. Retail companies want to hire staff for the store. Now, there is a need of training them before joining the store. After that, there is a continuous need of retraining them. We can, for the online piece at least, we have features that we are building into our own application, owing to which or through which we'll be able to retrain, refresh, and better equip the store staff to be able to deliver better, to be able to deliver larger results. So that is the whole idea. There is no plan to demerge Retaspec. We plan to build this as a vertical and take it forward.
Yeah. Thank you, sir. And can you throw some light on the IT staffing and hiring business as in general, considering that it has been soft over the last 1 year or so?
Right. So with the latest uh, election results in the US, there is a little bit of stability that people are now starting to feel, and investments in the technology space have started coming in again. We've
Okay.
signed up some very, very large logos in the last quarter for a lot of larger tech staffing companies or tech IT companies, as a matter of fact, not tech staffing companies, tech staffing projects for IT companies. The
Okay.
reason for the rebrand is one, to be able to attract talent in the right way. A lot of talent would not want to be on the payrolls of a pure play staffing agency.
Mm.
Plus, a few staffing projects that we are getting, there are possibilities of converting them into managed services.
Okay.
These managed services may be providing IT infrastructure support.
Mm.
They may be smaller application development. So when we already have the staff available, we'd
Mm.
rather also pick up these projects to enhance bottom lines there.
Okay. Okay.
So that is the idea of rebranding the IT staffing business.
Okay. Got it, sir. Thank you so much.
Thanks, Kishore. We'll take the next question from the line of Mr. Abhishek. Abhishek, you can go ahead, please.
Yeah, am I audible?
Yes.
Yeah, you're on.
Yeah, so actually, one of the queries I had has been asked already. So, first of all, I was actually there in the previous con call also. So, I remember listening that there was uncertainty about the future of the electronics goods training
Yes.
trading
Yes. Yes.
business. So, any
Yes.
update with regards to that?
So
And the
current,
next question I'll
yes,
ask after you answer this.
perfect. So currently we are continuing the electronics trading good business. See, till the time we have spare capital available in the company, we're going to be utilizing a lot of capital towards acquisitions going forward. As and when we are able to make the acquisitions, we're going to be scaling this down. If you notice, we are not putting an effort towards scaling up the electronics good business. It's a very easily scalable business line, but the larger focus for the company is not there. So currently we are continuing, but in the longer run, we will be discontinuing that business.
Just one more small question with regards to this business only. Do the incentives that were provided in the recent budget have any effect on this electronics trade and cruise business margin-wise?
So no, no, not to us. We are into a trading scenario.
Mhm.
Whenever there are incentives that come, it only increases the number of orders that one would be getting
Okay, okay.
in general. But the manufacturing companies keep these incentives to themselves.
Okay, okay. Then
It's
the
it's a
next,
field with very open pricing.
okay.
Uh, if you understand what I'm saying, it's a commodity.
Yeah,
So it
okay.
will always
I'm
remain to
getting the
be
general idea.
it'll always remain to be a low margin business.
Yeah. And finally, I just was hoping to get a bit more elaboration on what you mean by integrated services when you're referring to Speraspect. So, what kind of services, integrated services, if you could give more details with regards to that, and how
Integra-
you expect them to be margin accretive?
yes. So integrated services is retrospect, not speraspect. First, I'll talk about
Okay.
retrospect. Uh, right from talent identification, there is a need to be training talent on what the customer wants to sell. Every brand has a different selling DNA. Every brand, so say it's a clothing company which is targeting an average sales price of 1,000, 1,200. They are looking to sell in a different manner. Say they're a menswear focused brand. They need training on that bit. If they're a women's wear focused brand, staff needs to be trained in that bit. So that is one part of the training. That is integration before people get on the shop floor. Second, once these people are selling, there are always new product integration now introductions. So if you look at electronics, say there is a company that sells television, so there's a new feature that has come in. There people need to be trained on that. They need to be informed. Plus, they need to be refreshed on the brand's value offerings. There may be schemes that the brand has come up with. So there are trainings that need to be provided to these people. At the same time, each brand wants to know how much is the competitor selling. We can provide a lot of that data with our staff being positioned at different places
Okay.
in stores. So that is where it becomes an integrated retail offering.
It's more about information percolation and management.
Yes. So one is data, second is training, third is an audit, a store audit. It may be a customer experience audit. So
Mhm.
there are these are things that clients pay for. They want agencies to be able to provide, and they are going to different agencies for each piece.
Okay, so is this something that involves constructing your own? Okay, I think I understood mostly. Thank you.
Thanks, Abhishek. We'll take the next question from the line of Kevin Shah. Kevin, you can go ahead, please.
Thank you, sir. So, what's your current staff utilization rate, considering that you're today sitting on a workforce of around 33,461 employees? Which sectors are lagging behind, and which sectors are also seeing good demand for manpower? You could just throw some light on it.
Do you want to take that question?
Yeah. So Kevin, where we are seeing upticks are mainly towards the industrial piece because over the last year and a half, we have been investing on the sales side of the business. So we hired a few sales guys and who were specific to these industrial belts. So that is where the numbers are coming in from. Also, it is helping us scale up the apprenticeship business because when an associate joins the industrial setup, they first come up as a trainee, which goes into our apprenticeship business, and then when the finally the 1 year or 2 years is completed as per the offering of the course, they shift onto our payrolls as a industrial associate. So that is one area that we are seeing the uptick. And second is obviously the retail side. BFSI, it's been at par only for the last year or so for us. So these are two main areas where we have increased the headcount.
Got it, sir. So, can you also throw some update on the new government policies that are announced in the recent budget on your NAPS and the NATS and apprenticeship business, since the modalities were not known?
So Kevin, at this point of time, it's only a rough paper that has been floated to the industries. A final notification about the same is still awaited from the government's end. We assume that it should be available by maybe end of December or January first week is what we have been informed about. So it's the same information that is available in the market is what we have.
Okay, just a follow-up question. So, why is your revenue growth not matching the headcount growth? I wanted to understand where is the gap.
So Kevin, if you'll see the headcount that has grown is on the apprenticeship side. So apprenticeship side, we only are charging the service charge when we process the payroll of these individuals because the payment of salaries to these associates happen from the client's side directly onto the government portal, which we are managing for them. So the headcount growth on the staffing side, if you see GS plus IS, the headcount growth has been approximately a thousand odd people overall. So that is the reason why the revenue has grown significantly on a half year basis.
All right, sir. Thank you for answering and all the best.
Thanks.
Thanks, Kevin. We'll take the next question from the line of Amit Agicha. Amit, you can go ahead, please. Amit, you can unmute yourself and ask your question.
Yeah, good afternoon, sir. Am I audible?
Yes, you're audible.
Yeah, thank you for the opportunity. I had two questions. One was like, how does the company plan to maintain investor confidence amid thin profit margins? Are there any plans for dividend payouts or share buybacks in the near future?
Umit, we are an SME at the end of it, and it is imperative that we grow at a brisk pace. And at the moment, the focus for the company is to grow its size, scale, and give better services. So the margin drop is temporary, and the margin will come back. There are no plans for dividend at the moment because we anticipate we'll be needing funds as a matter of fact for the acquisitions that we are doing.
And how is the company mitigating currency exchange risk with its global operations?
So the moment we make an export, we book the currency at the same time. So that's how we kind of make sure that the risk is mitigated.
Thank you. That was helpful. All the best for the future.
Thanks, Amit. We'll take the next question from Shruti. Shruti, you can go ahead, please.
Hello. Good afternoon. Am I audible?
Yes, you're on.
So we see that your ROC is typically higher in the electronics business, while the manpower business has lower ROCE. This gives us consolidated single-digit ROCE of approx 8 to 10%. Once you decide to stop the electronic good trading business, I believe it will lead to a drop in ROCE to 7 to 8%. How will you make up or compensate for this gap? Are there any inorganic plans to scale up the business to target higher growth?
So Shruti, one, we are looking at three acquisitions. All three acquisitions are focused at high margin businesses, specialized staffing, IT staffing, managed services. So these are all businesses where the margin levels are higher. Second, the current ROC is lower owing to the fact that we have done a lot of expansion and hired a lot of people. And typically, it takes time for people to come to the right productivity level. Also, the market environment has not been the best over the last year or so, especially on high margin business fronts like technology and management consulting. So these are places where we make a higher margin compared to non-IT HR services, and these fields have been relatively quieter. And it is now that they are opening up. So we are sure that our ROC will rise.
Okay, sir. So I had another question. Your revenue are growing, but the margins are on the lower side. Is there any cost pressure in terms of staffing or technology cost? Could you please share more information on this?
So there is continuous cost pressure. So we are investing on technology. We've hired a team that is building our application, which we should be able to roll out in March of 25. So obviously there is a cost that we are incurring there. The larger cost has come in because we've hired a lot of senior people, and all of these employees, all of these assets will bring in greater business in the future. But at the moment, there is a cost pressure owing to that. It takes time for people to start delivering results. See, what happens is that if the work uh, if the work is slightly limited at a client's end, it's way more difficult to enter as a new agency. So the sales cycle becomes much longer. And at the moment, and at the moment, the market conditions have been improving since March. Market conditions have been improving, and they continue to do so. And we are hopeful that with the latest election results in the US, uh, and the renewed confidence that we are seeing from our customers towards investing in technology, margins will improve quickly.
Okay, sir. Thank you. That answers my questions.
Thanks, Shruti. We'll take the next question from Mandeep Chokshi. Mandeep, you can go ahead.
Am I audible?
Yes,
Yes, you're
Mandeep ji, how
audible.
are you?
Yeah, good. Yeah, thanks for the opportunity and congrats for the decent set of numbers. So, as I can see, we have two business segments, manpower recruitment and export of electronic goods. Now, the EBITDA margins in the electronic goods have been minuscule.
Yes.
So, I want to know how much of the company's capital is deployed in this line of business, and why not invest the seed funds elsewhere? I mean, in mutual funds or fixed deposits or elsewhere.
So, Mandeep ji, the margins dropped owing to a couple of model changes in the products that we were exporting. So by the time we procured the goods here, a new model came out in the market, and the price dropped significantly. That is why there was a drop in margin here.
But
Otherwise, it's a decent business. The second thing is that the capital is that I think Siddharth will give a clearer figure how much capital is deployed at what time.
So Mandeep, what usually happens in this trade is that if we remain out of the market, then people will not place orders with us. So we continuously have to be in the market in order to get the orders from various parties who we deal with. Uh, Secondly, like Vidur mentioned that there was a loss in the first quarter of the year where there was some procurement that we did where price drop was significant. So the margins fell in overall. That impacted the profitability of this particular sector. The fund utilization, what we try and do is whatever excess funds are there with the organization, we obviously put those into liquid or overnight funds, and we so that we get a return on that. The remaining amount is kept solely or majorly for the manpower business, and anything in between, whenever orders are there, like mobile exports is usually a, a cyclical sort of a business. The first half of the year is usually on the lower side, second half of the year is on the higher side, and we only intend doing this business till the time the manpower supply business doesn't utilize all the funds that are available to the organization. So
okay,
that's how we have structured the, the fund usage for the company.
okay, got it. And one more thing, as I can see in your presentation, you have mentioned you have closed positions in over 30 countries, and I guess we have physical presence in USA and a subsidiary in UK.
Yeah. So UK
Yeah.
subsidiary we've shut, but
Okay.
when we say we've closed positions in over 30 countries, we have Indian clients with operations globally.
Okay.
We proud ourselves in saying that we are an expert with Indian companies who want to enter any overseas market.
Okay.
So it's actually
So these are
maybe
basically Indian
yes.
companies who operate overseas.
These are Indian companies who've got presence in multiple countries. So there may be a client who's hired one person who's hired a person in Chile. There may be a client who's hired a person in one country in Africa or another country in Africa, or maybe Sri Lanka, Bangladesh, it may be Philippines, it may be Japan. So we have worked around the globe. So that comes as a part of our introduction, where we have closed positions in over 30 countries over the past 5, 7 years.
Okay. Okay. And so do we intend to have geographical presence elsewhere apart from US?
Not at the moment, unless we see a very large opportunity knocking our door. We think India is the market and US is the market where we should be sitting in.
Okay. Okay. Got it.
So
That's it from my side.
the reason we closed down the UK subsidiary was because we wanted to one concentrate on the India business and at the same time start focusing on scaling up the US business. For the US business also, there was a lot of uncertainty till the election happened. Now that the elections have happened, we will be looking towards growing the US business as well.
Okay. Okay. Got it. Okay. That's it from my side. Thank you.
Thank you, Mandeep. We'll take the next question from Vaibhav Kapoor. Vaibhav, you can go ahead, please.
Yeah, hi. Am I audible? Yeah. Okay. So my question is with respect to the acquisitions, do you have some indicative size of the amount of capital that you'll be deploying in your acquisitions? And could you just, you've given some indication, but could you just clarify the amount of capital that you're going to remove from the other existing businesses, whether it is the US or the electronic manufacturing, etc., that you'd be utilizing if you go in for an acquisition?
So Weber, we are looking at deploying about 80 to 90 crores in acquisitions.
Okay.
And we will not be withdrawing anything from the US. It's anyways not a very capital intensive field there.
Okay.
But at the same time, we will be obviously scaling down the mobile business as and when the capital can be deployed.
Okay. And what is
So
I didn't get the number of the current amount of capital that was deployed in the electronics business. I just missed that.
so Weber,
However,
yeah,
what usually happens is that up in the first half of the year, the capital deployment was on an average close to 20 to 22 odd crores on a monthly basis. which will increase to around a 42 or 45 odd crores in the second half of the
Which,
See, Weber,
okay.
if
Go
you,
ahead.
if you allow me, whenever we make a balance sheet, we make it on a particular day.
Absolutely.
So क्या होता है कि the deployment comes on that particular day.
Yeah, Siddharth clarified on that fact. I just wanted an indicative to know that, what's the size of the acquisition broadly. I just wanted a, bird's eye view, which you have
Right.
given. So I think that's about it. Thank you so much.
All right.
Thanks, Vaibhav. We'll take a follow-up question from Kishore Pandey. Kishore, you can go ahead, please.
Thank you for the opportunity again. I just had a follow-up question regarding your plan for the next 3 to 5 years. As in, where do you see yourself in terms of size and of revenue and manpower and profitability over the next 3 to 5 years?
So Vaibhav, it's a very dynamic field. We want to be an integrated HR services company, which has specialized business units offering each sphere of HR.
Okay.
We will look at continuing to grow by 30% year on year
Okay.
as an organization.
Mhm.
And currently for the next 3 years, we are sure that or our aim is very clear to be able to grow at a 30% CAGR.
Mhm.
So that's the intent for the moment.
Both
But
in
we
terms of
are
revenue. Sorry, both in terms of revenue and profitability.
so profitability will catch up.
Okay.
In the services business, whenever you're making any investment, it all comes in as an expense, unlike manufacturing, where you can clearly say that this is a
Mhm.
capital expenditure.
Mhm.
In services, we don't have large capital expenditures. All our expenses are on employees
Okay.
or on training those employees or maybe a marketing or sales.
Okay.
Everything is an expense.
Mhm.
There is no fixed capital, very, very little fixed capital expenditure that we can capitalize in our books.
Okay.
So all of this starts giving result with time.
Mhm.
Plus, there are market forces at play here. So there has been a lot of global uncertainty, which
Mhm.
now seems to be subsiding at least from the US standpoint, it is subsiding. But
Mhm.
Middle East and Europe, it's still in a turmoil.
Okay. 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 So a revenue projection will be around 30% CAGR.
Yes.
And so in terms of margin expansion, can we see any margin expansion also?
We will definitely be seeing margin expansion,
Okay.
but I cannot say in for certain that the margin expansion will happen in the next 6 months or 1 year.
Okay.
Because what
Right.
happens is that the moment we get an opportunity, we take it.
Correct.
At our current size and scale, we are clear as management that our aim is to grow the size of the company.
Right.
As long as we are making profits and we are being able to grow by over 30%, that's what
Right.
matters.
Okay. Okay. Right. I got it. Thank you and all the best.
Thank you.
Anybody who wishes to ask a question may raise hand or post a question in the chat box.
Since there are no further questions, okay, we have a follow-up from Vaibhav. Vaibhav, we can go ahead.
Yeah. I mean, in this con call, about 2 or 3 times, you've given an indication that you would like to grow at about 30 odd percent or, have a certain amount of scale. So just to give us also a perspective in the next 3, 4 years, what kind, because you are, so focused on growing it to a larger size, what advantages do scale give us that you are so you would like to concentrate on the growth aspect of the company, if you could.
So web of scale gives all sorts of advantages, starting with, say, when you look at retail. Retail currently is focusing on growing on tier 2 and tier 3 cities. There is a cost of recruiting talent there. So if we need to have a fleet on street and we only have 8-10 requirements in a particular city, it's not viable. However, suddenly if that number goes to 100, it becomes viable. Technology utilization. The more number of people we have, the better we can utilize technology. And the overall cost per person for that technology will keep going down. Scale offers multiple benefits, along with the fact that it becomes a larger brand to be able to attract larger customers.
No, I mean, I get that scale has its advantages, but just let me make this question more pinpointed in that sense that if you concentrate on certain areas of the market rather than the entire pie, uh, wouldn't that also give you scale in a particular area or geography or segment rather than expanding the entire pie? And going for margins or niches because you'll always have larger players, right? In that sense, in every domain. So wouldn't a niche strategy or make sense compared to a scale given our size? Or am I not understanding the economics of the business right?
So Weber, what happens is that now each of these business units is like a business in itself. The staffing GS plus IS is a business in itself. The apprenticeship piece is a business in itself. The recruitment services is a business in itself. The IT staffing is a recruitment is a business in itself. So all of these businesses, all of them need to grow at a 30%. And at the same time, this is not one of those fields where you can say that I'm investing a certain amount of money for growth. वो नहीं होता. It takes its time to grow, unless you're making a few acquisitions, which are also something that we've lined up.
So I will just to add further to this, if you see any of the larger customers who will be there in the market, they won't be area specific or region specific. They'll have offices across the country. They'll have presence in most of the states or tier one, tier two cities, for that matter. And in order for us to have those areas open to us, that scale will matter significantly because larger customers we can't say that we will not be able to maybe service them in a particular geography or B particular geography. So we have to show presence across country and have people to meet the requirements of the client as well.
Okay, I got that. I think Siddharth, you cleared it pretty well. Thank you so much.
Thanks, Vaibhav. We'll take a follow-up question from Amit Agicha. Amit, you can unmute and go ahead, please.
Yeah, thank you for the opportunity once again. My question was with respect to the trade receivables increase more than 50%. Can you put some light on it?
Yeah, so Amit, what happens in September and March is that clients also have to close their books. So they ask us to invoice on the last day or the 29th or the 30th of the month. But the payments usually come on the first, second, or third of the following month, and the payouts also happen. So if you'll see, trade receivables are higher. So is the current liabilities with respect to the salaries that have to be paid to those associates. So our average run rate when we started the year was approximately 52 odd crores, and in September it was around 63 odd crores. So that was one reason for the increase in trade receivables. The second reasoning is that in the last week of September, a lot of electronic goods companies came up with larger discounting, for which we had to procure goods in that particular week, and which was shipped in the month of October. That is the reason which was shipped in September, and the payments were received in the subsequent week or 10-15 odd days. That's again a reason for the trade receivables to be higher.
Thank you for the answer.
Thank you. I think so. This was the last question for the day. I now hand over the call back to Vanessa. Over to you.
Yeah, thanks. Vidur or Siddharth, would you like to give any closing comment before we end this call?
Thank you everyone for taking the time out and trusting in us, and we hope we'll be able to deliver in the right way.
Sure, thanks.
Thank you.
Thank you to all the investors for joining on the call, and thank you to the management team. This brings us to the end of today's conference call. Thank you.
Thank you.